Saturday, December 22nd, 2018, Maneco 64, home of alternative economics and contrarian views. So this afternoon, Billy is with us. This morning, I played some golf. Weather's a little nicer today here in London. The course is very muddy though. If you don't keep the ball in the fairway, you get some very bad lies, and in the fairway you can pick and place and clean the ball. If you get mud on the golf ball, when you hit the ball can go anywhere. So if you keep it down the fairway, you're fine. If you're not, you're gonna struggle. Anyway, is this it? We've been talking about and discussing this for the last 2 years, that the system is unsustainable, the fiat money system, a system based on that needs to keep growing and growing to feed it. We've had so far the worst December, and it looks like it's gonna be the worst December since the 1930s or the Great Depression in terms of stock market performance. We're seeing gold starting to pick up quite well on its own and also relative to paper assets, and I'm going to look into that. It's incumbent upon me to maybe make a call, and I would have to say that looking at the charts and at the fundamentals as well that we're seeing, it looks like things are about to get worse. Financially, economically, socially, we already see it, and politically. Does that mean things are going to be, everything's going to be bad? No, there's always opportunity. I think in Chinese, the word for crisis also means opportunity. So if there's still time, that's what I wanted to say. There's still time to protect yourself. There's still time to get out of the system. I think Jim Sinclair, 2-3 years ago, he came up with the term GOTS, G-O-T-S, get out of the system. G-O-O-T-S, get out of the system. It was a bit early, but I think right now, there's still a bit of time, but I think in about 4 weeks, 6 weeks time, it might be too late. And even if this is just a false alarm, this is not a crisis that will get worse, it doesn't hurt to protect yourself, insure yourself with precious metals. And why do I always talk about precious metals? Why? Because monetarily, that's the best way to insure yourself. Gold and silver are the only monetary constants in the last few thousand years. They're the only currencies or money that have kept their purchasing power for all these last few thousand years. Paper money, as we know, always reverts to its intrinsic value, which is zero. So said Voltaire a few hundred years ago, and he wasn't a stupid guy. So am I advising people to buy gold and silver? Not really. I'm just telling you what I do. And if you are interested, go ahead, do a bit of homework. You can also, if you're in the UK, use my promo code maneco64 to buy physical gold and silver bullion at goldinvestments.co.uk. They're arguably the oldest bullion dealer in the city of London, family-run business, and I recommend them. But do your homework. Wherever you get the best price, you get a 0.5% off from them. Anyway, the other thing I wanted to talk about before I look at some charts today, I'm just talking here, you know, I'm going to try to pretend, and that's what I kind of do, pretend I'm talking to a few friends and telling them what's going on. We need to start thinking, you know, what are we going to do if things happen as the way we've been looking for them to happen? The unsustainability of this debt-laden fiat money system, what will happen? What's going to come after that? What do we do if we're fortunate enough to have safeguarded some of our, savings or wealth? What do we do with that? Where do we shift our funds? Do we get out of gold and silver completely and invest in beaten down assets? Well, I'm not here to advise people what to do exactly, but it will be an opportunity, in my opinion. And does that mean that you have to go into the stock market after everything flushes out and collapses? Not necessarily. I think the stock market is for professionals, personally. I think one of the one of the side effects of this fiat money system is to is to have gotten people to put their money in riskier assets or investments. And I think the stock market is very risky. Stock market 100 or 150 years ago, that was just for the very rich who could afford to speculate. And I think because of how our fiat currency or fiat paper money system has debased our currency, 2-3% a year for 40 years, you halve the value of your currency. People have had to resort to going into the stock market, even though the majority of us are amateurs in terms of investments. Of course, I have worked in the city of London, and even for me, it's difficult, I can tell you. So, yes, if you do your homework, I'm sure you will find some very good opportunities. And I guess it will be at a time when no one wants to touch anything. Maybe find something, blue chip companies that will pay a good dividend, that are really beaten down. Who knows? The other thing I like to say is that investment is not just the stock market, but it's investing in yourself, in your family. In the end of the day, what better legacy and investment can you leave, to set up your family, your children, or even nephews and nieces? If you can help them, educate themselves or train for a job or get a skill, I think that's just as important. And I've told other family members about that years ago, when they asked me about, advice, and I said, well, invest in your business, invest in yourself. So that's the other thing I like to say. It's not just the stock market. So what makes me think right now that we could be in the middle of a crisis? And of course, the charts look really bad. We've had the stock market has had a horrible run. On Friday or yesterday, the Dow closed down over 400 points, 1.81%. S&P finished down 50 points, 2%. NASDAQ finished down almost 3%, or 195 points. Performance-wise, as I was saying earlier, usually December, people talk about the Santa Claus rally, right? Well, Santa Claus is coming late on Monday, early Tuesday, and with 1 day left, it looks like we're not going to have a Santa Claus rally this year. That's why a lot of the times, all these things are not easy to. If investments in the stock market was easy, everyone would be doing it. People say, oh, the year's ending in even numbers, or after midterm, stock markets do that. Yeah, generally sometimes they do, but like this time is the worst December since the Great Depression. Does that mean we're going to have a Great Depression? Maybe we could. Why not? But performance-wise, for example, in the last week, the Dow's lost 6.8%. S&P 7%, NASDAQ 8.3%. On the month, So roughly the month of December, they don't have a month to date here. The Dow is down 7.5%, S&P down 8.2%, and NASDAQ 8.7%. And year to date, we're almost down 10%. The Dow is now 9.2%, and S&P 9.6%, NASDAQ 8.26%. So things are not looking great, and you can see for the rest of the world, they're having a tough year as well. It's all red, and I would argue as well that the rally we've seen in the US since 2009, from when the Dow was at 6,600 or so to 27,000 that we went to beginning of October, the world stock market, they haven't performed as well. So I think the US has a lot more to lose in relative terms. And I'm not saying that the rest of the world is going to go up, but they might not go down as much percentage-wise as the United States. And that's maybe one of the reasons why the dollar is going to have a tough time. And I'll go into the charts right now. I'm going to go into the dollar index chart as well. And I want to talk about Goldman Sachs stock, which I've been talking about for the last 6 weeks, maybe, 6 weeks or so. And I'll look at the KBW Bank Index, which is very important. I'll have a look at gold. I'll have a look at the Dow-Gold ratio, gold in British pounds, and the dollar index, and the cycles in the dollar index, and what I think it's telling us. So one of the reasons why am I concerned? Not really, because I think if there is a crisis, personally, I think I've protected myself well. I'm got out of debt. I've got a lot of most of my savings in precious metals, physical gold and silver. I have little in the banking system, so I'm not worried. But maybe some of you are, but you still have time, I think, to protect yourself, to insure against some kind of financial calamity. And the chart of Goldman Sachs is very interesting, because I would say since the early 2000s, late 99, when they repealed Glass-Steagall, the Clinton administration, I think it was 1999, the United States economy has become much more financialized. So has the rest of the world. It's an economy based on financial engineering, credit, subprime, mortgages, securitization. Everything is securitized. And Goldman Sachs is the poster child of this system. And it's also a poster child of influence for this system through lobbying. And I'm not saying other banks aren't involved either, like JP Morgan or Citigroup or Barclays. Of course they are, but we all know Goldman Sachs, they run the central banks. I mean, you got Mark Carney at the Bank of England, ex-Goldman Sachs, Mario Draghi at the ECB, ex-Goldman Sachs. You had Bill Dudley from Goldman Sachs, up until recently was president of the New York Fed, which was the most important regional Fed bank. And the list goes on, treasury secretaries, prime ministers of Italy and Greece, caretaker governments. They're everywhere, right? So I've talked about this before. Some of you might have seen it, but things look to be getting a lot worse for Goldman Sachs. And I've done a little bit of comparison here. I compared, in the last crisis, Goldman Sachs topped around $250 in October of 2007. And you can see that it collapsed all the way below 50. And that was in November of 2008. So that was roughly 392 days. And that was at the heart of that great financial crisis of '08. If the Fed or the Treasury hadn't bailed out AIG and come out with TARP, Goldman Sachs probably wouldn't exist anymore right now. And that would have been a good thing. But a lot of other banks would have gone under, of course. I've replicated that period onto now because we topped, Goldman Sachs topped in March of this year, just under 280, I think 277 or so. And you can see, I've been looking at this chart. When we were above 200, it looked already pretty bad, but it's continued to drop. And you can see the last few days of this week, we really broke that trend line, and it's looking quite bad. It looks like unless we get back above 170, it looks like this could be it. Goldman Sachs could be pointing to a major calamity in the financial system. I've done a little bit of calculation here. I use this date calculator, add to or subtract from a date. So I put the top, the recent top in Goldman Sachs was 12th of March 2008, and I added 391 days, which is roughly how long it took for Goldman Sachs to top and bottom the last crisis. And I come up with Sunday, 7th of April 2019. I know the market's closed on Sundays, but it could be April 8th, or it could be April 5th, the Friday. So does this mean the crisis is gonna, the markets are gonna bottom in April of 2019? Not necessarily, but I just think this is showing me that things are gonna get very, very turbulent in the next 3 months or so, especially, even, in the coming week. We've got abbreviated days because of Christmas and New Year's, but things could get really ugly, I think, this coming winter and the beginning of spring next year. So that's Goldman Sachs. Now the KBW index, which is an index of the biggest lending institutions in the United States, which include JP Morgan, Bank of America, Citigroup, Wells Fargo, Northern Trust. Goldman Sachs is not there because Goldman Sachs historically is a more of an investment bank, but they have become a holding bank. They had to switch to become a bank, a whole, how can I say, a depositor bank in 2008, or else they would have gone bust, because by turning into a normal depository bank, they were able to borrow from the Fed discount window. So they had to do that. And the Fed let them become a bank over a weekend. If you and I try to apply to become a bank, it would have taken months, if not years, right? But the KBW index is an indicator of the health of the whole financial system in the US, I would say, not just Wall Street, but all big regional lending institutions. And look at it, look at this KBW. We topped also at the beginning of 2018 at around 117, and right now we're at 82. And notice how we weren't able to reach the previous top from 2007, which is around 121. So that's another indicator that things are not doing great. And look how, this is a monthly chart. Look how the month of December has been so horrible for this index. So now I want to look at the Dow Gold ratio, because I think it's important for people to look at that, because yes, the price of gold is important to some extent, but it's more the relative purchasing power of gold that matters. And as you can see here, gold is doing very well now against the Dow. We topped just below 22.5 in September this year, and the Dow has, of course, in terms of ounces of gold. And now the Dow is like less than, you need 17.84 ounces to get one Dow. And a couple of months ago, you needed over 22. So that's a good sign that gold is doing its job as a safe haven. And then a longer term, 200-year longer term chart of the Dow gold ratio, which I've shown to you before as well. And the interesting thing about this is that it shows that ever since the Fed was created, how they've created this volatility, because the system is unanchored. They've taken, the anchor of the system, which is physical gold and silver, a sound money system, has become a non-system. It has been gradual, but you can see that the crisis, they get, more extreme and more extreme. We just got back above that green line, which is right in the middle there, which is the average of that ratio. And it failed, and we're now coming back down. And I think we're doing just what we did in the like 75, 77. It's taken a little while, this correction, and then we're going to drop back. And I think we're going to go to that red line in the bottom there. We could even have, the ounce of gold by more than one Dow. Who knows? So, and that's when I think I've said in the past, that's when things will have been rebalanced or reset, as some people say. And hopefully, after this next crisis, people will demand sound money and demand abolition of central banks. Because in a free market system where prices, and I know the market sometimes doesn't work perfectly, but it's the best thing there is. Free market, right? We don't need central planners to tell us what the market should determine to be, determine the price of money, interest rates. We should let the market do its job. And I know sometimes markets get disrupted, but this chart just says it all. That under a gold standard free market sound money system, it's a lot more stable. The central bank, the Fed was created to supposedly make things stable, create an elastic currency, but all it's done is destroy the currency and made everything more volatile and unstable. So my hope is that people will wake up. What's the probability that will happen? I don't know. If I said 50-50, that would be pretty high. I just hope, people come to their senses. I want to show my UK viewers now the XgCTCWb, which is the price of gold in pounds. This is a monthly chart all the way back from 2007 to present. And you can see that it's a nice teacup and handle formation, or an inverse head and shoulders, if you want to call it. And I think we're very close to breaking above that trend line, as you can see. This month it comes around 1,005 or 7 or thereabouts. We might not break above that level. I think the high, this has been just around 998 this week. But come next month, I think we could see the pound the price of gold in pounds break out. The dollar gold price, as you can see here by this chart, the interesting thing that happened in this daily chart this week is that we closed above the green line, which is the 200-day moving average. In my opinion, that's quite significant. And I think, gold looks good. I've said before that I think the August 15th low this year was the low, at 1160. August 15th. In London, it was the 16th, but it happened late, New York time. And it's interesting that it's the same date when, you know, it was the 47th anniversary of when Nixon closed the gold window, August 15th. So was that done on purpose? I don't know. It could have been by accident, but you never know with these people. Dollar index to finish off, because I think it's very important to keep an eye on the dollar as well. And all I will say is that I've done videos before about the cycles in the dollar recently. And this is the dollar index going back to 1975. And just quickly go through here so this video won't last forever. Fourth quarter 1978, the dollar index bottomed at 82.07, and then it took about 7 years and it topped in 1985 at 164.72, and then from 1985 to 1992, another 7 years, it bottomed at 78.19, and then 1992 to 2001. That was a little longer. It was about 9 years, and it topped at 121. And then another 7 years later, in 2008, it bottomed at 70.69. So these cycles are roughly 8 years or so. 7, one was 9, the others have been 7. And then we've had since 2008 to the first quarter of 2017, so 9 years, the dollar topped at 103.82. So I think the cycle in the dollar is, you know, topped, and we're going lower now. It's going to probably take another 7 years to bottom. Where will it bottom? Well, difficult to say, to predict these things, but it looks like we're going to have a lower low. You can see the highs we've had. We've had lower highs and lower lows, so it will be somewhere below 70, I think, maybe towards 60, maybe a little less. And that in of itself is telling me that things are not looking great if the dollar is topped and it's going to start coming off. We've had a really little counter trend rally now in the dollar, of course, this year, since the first quarter of the year, but I think it's pretty soon is going to start turning back around and go down again. And of course, the dollar is still the major reserve currency of the world, and if the dollar goes down like that, it could be a sign that the system, something's wrong with the financial system. Well, tomorrow I'll probably maybe do a live stream tomorrow night, so I won't be doing a video. I know this is a really long video, almost 30 minutes, but it is the weekend. It's almost Christmas. Hopefully people have more time to watch it. If you enjoyed the video, make sure you hit the like button. Make sure you share it far and wide. If you haven't subscribed to the channel yet, make sure you do. And you can also follow me on Twitter, Steemit, and DTube. I wish you all a great weekend, great Christmas and New Year, and all the best, you know, in the coming year as well.